What's up everyone, Jamie here. Welcome back to my channel. In today's video, we're going to be discussing my investment property portfolio. I wanted to share a little bit about each investment property I own, as well as the lessons I've learned from this venture in my life. But first, if you're new to my channel, I started this journey to be able to help people with their personal finances and hopefully be able to teach people along the way how to invest into real estate and the stock market as well. So if you have any issues with your personal finances or just have some questions and you're looking for some help, I'm willing to do that for free. So if you want to email me at thejamiepearshow@gmail.com, I'll be happy to respond. So that being said, let's go ahead and get into today's video. So let me tell you a little bit about my backstory first. When my dad passed away in 2006, and then we ended up selling our family business in 2007, that gave me access to some cash. But then the financial crisis of 2008 happened. So everything went down at that point. Real estate went down, stock markets went down. So it was a scary time to do any type of investing. So the only thing I felt comfortable investing in was my personal residence and my business. But once I sold my business, I had access to even more cash. So then I decided, okay, now I need to start looking at other investments. So I started looking at real estate in the Denver area, but I felt that the prices of the houses were too high for the amount of rent you could get. So the amount of cash flow I just didn't think was going to be good enough. Then I said, what other markets could I look at? Luckily for me, I had two cousins who were real estate agents in Kansas. So I started looking at that market. I saw that the rents were good for the price of the houses. So I started looking to see if I could cash flow in those areas. So that's when I started really digging into the Kansas market. So in 2016, I started working with my cousins and started looking for properties there. So that summer in August, I found a 3-bedroom, 2.5-bath ranch in Olathe, Kansas, as well as a duplex in Kansas City, Missouri. We went ahead and put offers on both of them, and I ended up getting both of those properties. So the next thing I needed to do was find a property manager. So I had my cousins ask around their office if they knew of any property managers, and I Googled some as well. I talked with about 3 or 4 and then finally found the one that I decided on. I decided on them because they were also real estate investors, and they knew the rental market in the Kansas area very well. So now that I had my property managers and my first 2 properties were going to close soon, I was all set on my first 2 properties. So my first property was a 3-bedroom, 2.5-bath ranch. I ended up buying this property for $204,000, and again, I paid all cash for this. Since I did that, the closing costs were very low. All I had were the inspection as well as the title work. So roughly, I'd say it was less than $1,000. So let's say all in, I was in this house for $205,000. This house was a move-in ready house. Everything on it was fairly new and it didn't need much work at all. My mindset on buying these houses with all cash was whatever the profits were, I was going to be able to use as take-home pay. And the property would keep appreciating over time, so that's how I'd get my overall long-term return on my investment. So the first year, though, my cash-on-cash return was not as high as I was expecting. It was only about 4.5%. But the good news is, over the 5.5 years I've owned this house, the house is now worth $325,000. So it's appreciated over $120,000. That's roughly around a $21,000 a year appreciation rate. So with the appreciation added in, my total return on my investment for the first year was about 14.5%. The second and third year got a little bit better with the cash-on-cash return. It was around 6%, while the total return on investment was around 16.5%. But then in year 4, I decided to do a cash-out refinance on this property. Since interest rates were dropping after COVID happened, I decided this would be a great time to do that and pull the equity I have out of this house and use it to invest in other areas. So I decided to pull out about $150,000 from this property, and the closing costs to do this loan were about $5,000. So after my original investment and those closing costs, my total cash invested in this property was now sitting at $59,000. So years 4 and 5, my cash on cash went way up, as well as my return on my investment. Now my cash on cash return tops off around 10% every year, while my return on investment, including the cash on cash, the appreciation, and the principal pay down, is around 49%. So as you can see, having less cash invested in the property, your cash on cash and your total return on investment are going to be a much higher percentage. So the second property I bought was the duplex in Kansas City, Missouri. This one I got for about $166,000, and both of the units were already being rented. So this was an income-ready investment property. It already had tenants. I just had to do the closing and it was ready to go. Each unit was renting for about $800 a month, so that was around $1,600 total. That almost met the 1% rule. So the 1% rule is where your rent is about 1% of your total purchase price. So I thought this was going to be a great deal, that I was going to cash flow really well on this property. But when I bought the property, I knew, looking at it, both sides needed some work. I was figuring about $10,000 on each side is what I was going to have to spend to get them more rent ready than they currently were. The current landlord that they did have didn't do any repairs in the house, so it was in pretty rough shape. Again, here I've made most of my money on this property through appreciation. It's now worth about $270,000. So this is where I've made about $100,000 in this property in 5.5 years, roughly about $18,000 a year. Being in a lower income area, this house has actually been one of my lowest cash on cash return units that I own. The first year, both tenants ended up moving out, so I had all those repairs I had to put into it. So my cash on cash return for the first year was under 2%. But the good news is with the appreciation, my return on investment was around 10% for the first year. So for the 5 years, my highest cash on cash return has been about 7%. So again, not as high as I was expecting. And my total return on investments range from anywhere from 12% a year to 17.5% a year with the appreciation. I have not cashed out refinance this property. If interest rates drop back down, I may do this again. I could pull out all the money that I have invested in this property and then have $0 cash into it. And then my cash on cash return and total return on investment would be much higher. So seeing that the Kansas real estate market was hot and was appreciating really well, I decided to buy my third property. And this was a 3-bedroom, 2.5-bath, single-family house in Olathe, Kansas. I bought this property for $190,500. And again, here I paid all cash for this, and so my closing costs were only the inspection and the title work. So it was under $700. So let's just say I was in this property for $191,000 total. I was able to rent this house for about $1,500 a month. So in 5 years, this house is now valued at $295,000. So again, here I've made another $100,000 on this property. So roughly about $20,000 a year in appreciation. So for the first year, my cash on cash return was about 5%. And in years 2 and 3, it jumped up to about 6.5%. With the appreciation on the property, my total return on investment was between 16 and 18% every year. But like my first property in 2020, I decided to cash out refinance this property as well. So in this property, I took out $135,000 in equity on it, and the closing costs for this property were around $6,000. So my total cash invested in this property was now sitting at $61,000. So in year 4, this made my cash on cash return jump up to 11%, and with the appreciation and the principal pay down on the property, my total return on investment jumped up to 49%. So that's it about the third property. Now let's go ahead and look at the best deal I've ever purchased, my 4th and 5th properties. So for my 4th and 5th properties, remember how I was telling you my property managers were also real estate investors? Well, I was working with them and I told them, hey, if you ever find any wholesale deals that somebody needs to pay all cash for, let me know. I'd be interested. So the end of 2019, they approached me with a deal. So these are 2 houses this guy bought and he wanted to dump them. He just said, I need $300,000 for them both. These were 2-bedroom, 1.5-bath manufactured homes sitting on top of foundation where there was an unfinished basement on each of them. His plan was to finish the basements and make them 4-bedroom, 2.5-bath properties. So talking to my property management company, they also have contractors they work with. We decided that, hey, if I were to be able to get these basements finished, these would rent for probably around $1,800 to $1,900 each. So I went ahead and did an all cash offer for this and ended up getting the deal. I ended up buying these properties for $300,000, but I knew we were going to have to put between $80,000 and $100,000 into finishing the basements. So all in, I'd be at about $400,000 on these properties. So I closed on these deals in February of 2020. And then guess what happened? COVID. That's right, I have perfect timing. Anyway, so that didn't deter me, but we went ahead and kept going. So I was working with my property manager to get the basements finished as quickly as possible. So we ended up putting about $80,000 into both basements to get them finished. And in July, we were able to rent out both properties. We had really great news. I was able to rent each of the properties for $2,100 instead. All along, I knew I was going to cash out refinance these properties once the basements were done because their appraised value was going to be worth more than I bought them for. So all in now, I was about $390,000 in cash I was in on these properties. So after the basements were finished, I went ahead and cashed out refinanced them. And each property ended up being worth around $260,000. So that was about $520,000 on the whole deal. So already I made $120,000 on this deal just by buying them and finishing the basements. So I did a 70% loan to value cash out refinance on this, and the closing costs were around $10,000. So after doing this 70% cash out refinance, I got back $375,000 of what I originally invested. So my total cash invested in these properties was only $24,000. So as you could probably figure, getting $2,100 in rent from each of them with only $24,000 invested, the cash on cash return and total return on investment were going to be huge. But my cash on cash return for year 1 was 91%, and my total return on investment was 205%. So what a great deal. Before we go over the lessons I've learned from this venture, if you are thinking about buying your own first rental property, I did just do a video on that and I have the link above. I'll also have a link in the description. One of the more important lessons I've learned is that I prefer having my rental properties in more desirable areas. When you do this, you tend to get higher rents, better tenants, less turnover, and better appreciation over time on the property as well. All my single family homes are in Johnson County, Kansas, and my one multifamily home is in a more lower income area in Kansas City, Missouri. And all my single family properties, I've gone through very few tenants, while my multifamily property, I've gone through tenants a lot more often. I've had a lot more vacancy, I've had a lot more repairs, things like that. So for me personally, I like to try to be in more desirable areas so I can stay away from all those headaches. Next, if you can pay cash, you might be able to get better deals. A lot of off-market deals and wholesale deals might require you to pay cash, but you don't need that to get started. And if you do end up paying all cash, I would definitely look at cash out refinancing it down the road so you can have less cash invested, because that will just improve your cash on cash return as well as your return on your investment. For me personally, when I'm analyzing a rental property, I'm trying to look for a 10% cash on cash return or a minimum of a 20% return on my investment every year. Again, off-market and wholesale deals, you have a better chance of making those higher returns, where in today's market, I'm not sure if those returns are even possible. I haven't even bought in the last 2 years because the way the prices of housing has gone up, I just don't know if this is even sustainable. And now interest rates are going up on top of that. So where on my cash out refinances, I'm paying 4%. Where now on a new property, I'm paying between 5 and 6% on a loan. So that's just going to dig into your cash on cash return. Again, I don't even know if this is going to be possible to make money. So hindsight's always 20/20. Who knows what the future is going to hold? You'll definitely have to do your own research to figure out if this is the right opportunity for you. But overall, in the long run, real estate has generally gone up in value. So just keep that in mind when you're making your decisions. Finally, for my rental properties, all of them are in the same bank account. So I like to create an emergency fund. So as I get the rents, I just build up this emergency fund. I have it around $30,000. So that way I can cover any major expense that happens at any of these properties. And once it gets to that $30,000 level, I just pay all the excess profits to me as rental income. And as it drops down, I build it back up again. This way you never have to dig into your own cash to be able to cover some of these repairs. So those are the main lessons I've learned in my journey. Hopefully these tips will help you on your path to getting your own real estate investment properties. So that's it for today's video. Thank you so much for watching. Again, I am here to help. So if you have any questions or comments, just leave them below. Again, you can also email me at thejamieparrisshow@gmail.com. If you enjoyed this, if you could please like the video, subscribe to my channel. I greatly appreciate it. With that said, have a fantastic day, and I'll see you on the next one.
It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.